That's right. It's 150 basis points hike on the monetary policy rates, taking it from 14% to 15.5%, while the cash reserve ratio is now at a minimum of 32.5%. All this to curb inflation, which for August was 20.52. Well, I wonder what it will come to at the end of September. Anyways, this is the decision from the monetary policy for the month of September, the meeting that ended yesterday. What should Nigerians expect from this? We have Damilare Ojo. He's the team lead at Meristem, joining us for that conversation. Hi, Damilare. Good morning.
Good morning, Ini. Thank you for having me.
Good to have you. So I don't think anyone is saying anything or having any other conversation apart from this at this time, at least. Going from 14 to 15.5, that's 150 basis points. And I think another one that seemed unexpected was the CRR, the cash reserve ratio, which of course is now at 32.5% minimum. Explain to us, or explain to Nigerians now, why is this important? Why should they know about this? How is this going to affect them, affect their purchasing power, affect the economy?
Thank you very much once again for having me to discuss this. I mean, what happened yesterday was, I would call it another major policy shift that we have in Nigeria. Of course, right from May, the Monetary Policy Committee of the Central Bank has consistently been increasing the benchmark rate, which we call the monetary policy rate, the MPR. And I mean, the year started with the MPR at 11.5%, and by the meeting of May, we saw a 150 bips increase. By July, another increase, which was 100 bips, and then just yesterday, another 150 bips increase, which now brings the MPR to 15.5%. And as the CBN governors mentioned, the major focus of the CBN, I mean the monetary policy now, is on combating inflation, on fighting inflation. And what we've just seen is an aggressive stance towards bringing inflation down in Nigeria. And I would say that the other one that we saw yesterday, which I don't think anybody was expecting, was the increase in the cash reserve ratio, the CRR, by 500 basis points to 32.5%. And I think that, that is just still, I mean, a move to mop up system liquidity, because in Nigeria, or generally in any economy, one of the things that fuel inflation is the amount of liquidity in the system. So, I mean, maybe by the CBN's assessment, banks have a lot of liquidity, and because of that, that is one of the things that is fueling inflation in Nigeria. So I think that is why the CBN has come out and say that we are increasing the CRR as well. And what does this mean for Nigerians? I think that the major things that Nigerians should be looking at, or that we should be worried about, is our GDP, our economic growth. And I say that because one of the data points that we look out to measure GDP as a leading economic indicator is the Purchaser Managers Index, which is we call the PMI. And when you look at the trend in the PMI in the last 3 months from June, we observe that there have been, consistent decline in the PMI. And more interesting, or more, I mean, not interesting, I would say worrisome, is the fact that in August, the PMI is now below 50 points mark. 50 is like a benchmark below which we talk of decline in economic activities. So if that continues, I mean, if PMI continues to decline, what we are likely to see is that our economic growth is likely to reduce. For Q3, we are likely to see a slowdown in growth. And, maybe if inflation continues to increase and the CBN also continues its aggressive stance, it's only a matter of time before we see that means for Nigerians.
Okay, but you know, the thing is, isn't it kind of contradictory? The CBN is aggressive about mopping up liquidity from the economy, you know, so we see not just the interest rate now, but also the cash reserve, meaning that banks will have less funds to give to the public. But at the same time, the CBN is through its intervention, it's also sending out liquidity into the same economy. So isn't it kind of contradictory? Isn't that also feeding into the inflationary pressure that we're talking about and trying to deal with?
Yeah, you are very right, and I mean it's a bit it's I would just say that for the CBN, I think that from the point of view of the monetary policy rates, I would say the actions that we saw yesterday is like a double-edged sword for banks in terms of the fact that increasing the monetary policy rate is positive for banks. They can increase the rate on their loans. The rate that they charge on their loans is going to be higher, which would mean increase in interest income for them. All things being equal. But now all things is no longer equal because the CRR has also been increased, which means that the amount of cash that banks have to lend, before you say interest income is going to increase, you are looking at two different variables. I mean, in simple terms, you say revenue is price times quantity. For banks, the price is the interest rate they charge, and the quantity, basically, the bulk of the quantity from which they make their revenue is the loan that they're able to give out to customers. Now, but what the CBN is concerned about is now the loans that you are giving out to customers is going to be charged at higher interest rates. That's if you go through a bank. But if you go through the CBN's, intervention funds, those funds typically or usually come at a cheaper rate compared to the rate that a bank would ordinarily charge. So when you look at it from the perspective of the CBN, they are just taking two contradictory, we can say. But on one hand, the increase in MPR signifies that we are aggressive on inflation, and they've also increased the CRR. They are also showing that they are aggressive on inflation. But then channeling funds to I mean, for intervention purposes, is just to say we know that this action that we've taken, increase CRR, increase the MPR, is likely to is going to lead to lower borrowings, is going to also impact growth negatively. But then the funds that they are putting out through the intervention loans is sort of to counterbalance some of the effects. Although it won't be enough, right? The amount of funds that the CBN will be able to give out through the intervention funds won't be enough to to mute the impact of banks not being able to have enough liquidity to give out loans from their own end. But then those intervention loans are just to, and you remember that those intervention loans are targeted, they have specific sectors that, they are targeted towards, real sector. So that is what the CBN is saying. On one hand, we are fighting inflation, and we know that fighting inflation will cause a decline, is likely to decline in GDP growth, or even lead to a decline altogether. But those intervention funds are there at cheaper rates, to targeted sectors to just partly offset some of the effects that we might see from the negative effect that we might see from the total action the monetary policy committee.
All right, still talking about the CBN's intervention. In 3 years, they've intervened with 9 trillion naira. And you've said, of course, they're targeted sectors, the real sector that they want to make impact. It will be interesting to know the value, the real value, or the impact of this 9 trillion naira. Even in this, because I know, for instance, there's the Anchor Borrowers program. But if you go to homes of a lot of Nigerians, they're still eating imported rice. So it will be interesting to know the real value and impact of this intervention by the CBN that has totaled 9 trillion naira in the economy in 3 years.
Yeah, I mean, I totally agree with And, as an analyst, I think that is one of the major issues that I would say we have in Nigeria in terms of data, right? Availability of data, and even just not availability, real-time availability of data. So a lot of times the CBN governor has come out to say our intervention funds is this amount, it is given to this sector. We have the health sector, we have the manufacturing, we have the agricultural sector and all of that. But there is no real data to measure the impact. And as a matter of fact, the CBN governor has not been able to. All they tell us is, yes, these things are helping the economy and all of that, but where is the data for us to make, for anybody who is interested to make an independent assessment of the impact? That is not available, and that's cuts across the different policies that we have in Nigeria. I mean, one of the other policies that that comes to mind now is the RC 200, the FX policy that was taken earlier. I mean, sometimes back as well. So CBN has said that it has brought in a lot of funds, but we are not seeing the data out there to be able to, for everybody to be able to assess what is happening in that particular sector. So I think that that's something for the for the authorities to actually look into. Nigerians need to see the data, analysts need to see the data, to be able to say, okay, these things are actually making impact. And I would say for free that and I'm sure you are also aware of this, that if you ask a lot of farmers, right, those who are supposed to be targeted, who these loans are supposed to be channeled towards, many of them would actually say they don't actually get these things. So the question is, where do these things go to? Where do these funds go to? I mean, do we have the Nigerian factor in some of these things? But if we don't have data to assess them, we won't really be able to speak to them beyond what the CBN governor has said. So I think it's something that is very important, and that's an important point that you've raised. But we don't have data to assess that.
Yeah, well, I guess as a journalist, we have to push the CBN to release those data so we can justify the 9 trillion naira that they've spent in 3 years. But just before we let you go, and really briefly now, the CBN has given the banks until Thursday to comply with the new CRR. And of course, there's been some criticism following that some of those institutions cannot meet up with this short notice. Why is the CBN in such a hurry for them to adopt this new one? Because if not, by Friday, then there are consequences waiting for them already. And the policy was just yesterday.
I mean, exactly. So I don't also know why the CBN is such in a hurry. And I think that this kind of thing gives us a lot of regulatory, I would say, puts us in a place where you say regulatory uncertainty, right? The CBN just brought out a policy yesterday. There's usually that time that when new regulation is brought out, you give, parties that are involved time, or that will be affected, time to adjust. But then the CBN has said Thursday is a deadline. I wouldn't know why the CBN is in a hurry, but I think it's going to negatively affect in a couple of in terms of quickly liquidating whatever investment securities they have to meet up with the new CRR regulation. But also don't forget that a lot of Nigeria is actually has always been higher than the minimum. A lot of banks have their effective CRR as high as 50%. So I wouldn't know if the CBN would also use part of the initiative that the CBN has brought out recently is to use the special CBN bills, that is special bills to sort of return part of the excess CRR to banks. Maybe CBN would take that. Some banks might use that as depositing that with the CBN to say, let's use this to, as a means of meeting up with that minimum CRR. But for a lot of banks are going to be affected, really, and but I think that in the medium term, things are going to adjust for all banks.
All right, Damilare Ojo, team lead at Meristem. Thank you so much for sharing your thoughts with us. We do hope the CBN will answer us and give us the answer to some of those outstanding questions. We'll take a break now, and of course the conversation around the MPC's decision yesterday is an ongoing one, and of course the impact is one thing that would stay on the front burner for a couple of weeks at least. We'll take a break now. After the break, it's AFEX time here on Business Morning on Channels Television. To stay with us.